If you've started investing and you want to know why the S&P 500 is king, we'll show you in this video. Let's go. So guys, welcome back to Inside Investing, and in today's video we'll show you exactly why the S&P 500 is key to build up your ETF investing portfolio. And we'll show you which companies are the biggest and which companies are all included in the S&P 500. As the name already says, there's 500 different companies included for you to understand really why this is such a good strategy for you and such a good ETF to actually have in your own ETF portfolio. And as you can see on the screen, we've opened up this nice little tracker that's made available by Finviz. You can look it up online. This one shows all of the companies that are included in the S&P 500 separated across the different sectors. Really helps out to understand how large the S&P 500 is and why this is such a successful ETF to have. If we also then make a little bit of a comparison against single stocks, you of course understand that if you buy, let's say, the stocks of Microsoft, you're only buying into Microsoft, one company, instead of buying into all of the technology companies, for example, Oracle, Adobe, and the other ones that you can see right there in the software and infrastructure sector as part of the technology bucket. Of course, there's an alternative. You could potentially buy ETFs that cover the technology sector, so then you would already have a little bit more exposure to potentially, a couple of these large companies that are included in this bucket, in the technology bucket. But if you buy the S&P 500, you're buying 500 different companies across all of those sectors. So you have the technology sector, you have the communication services sector, you have the consumer defensive sector, the energy, the industrials, healthcare, financial. You have all of those different sectors included in one big ETF in comparison with just buying one single stock. So let's say Microsoft has performed very bad in the last couple of months, then you would see that your full portfolio will go down in value because you've only bought shares of Microsoft. Well, in this case, yes, okay, Microsoft has done bad as well, but there's also a lot of companies that actually perform better and that perform good that will make up for the loss of Microsoft. And that's why we really think that ETF investing, if you're, let's say, a long-term, low-risk investor, then ETF investing is the way to go. That's why we really apply this strategy ourselves as well. Of course, if you're investing for, let's say, the short-term gains, if you really want to make a quick little win, then this might not be the strategy for you, because here we're talking about an investment horizon of 5, 10, 15, 20 or even longer years. So that's a very long period, of course. We do understand that as well. But the risk, on the other hand, is very low. It's very easy for people to understand, and that's why we really like this investing strategy. Well, then going back to the S&P 500, let's look at the largest companies. Those are then, of course, the largest boxes, I would say, on screen right now. So one of the largest, I think this is the largest actually. That's going to be Apple, performance of Apple. I think this is set to have the performance of the last year, which has been at around minus 11.6%. We don't really care about the short-term profits that you could potentially make. The other big one is Microsoft here on top. We've got Google at a very, very red minus 31%. Then we've got Amazon at minus 38%, guys. So that's, I think, one of the biggest losses on screen that I see this quick as well. We've got Tesla as well, quite a large bucket. Procter & Gamble company. We've got Johnson & Johnson as part of the healthcare sector. That's also quite large. Let's go to the right there. We've got ExxonMobil as well as the Chevron Corporation, two large ones in the energy sector. And then in the financial sector, we also have Berkshire Hathaway, of course, being led by Warren Buffett at this moment. As part of the credit card services, we have MasterCard and Visa, two of the largest ones over there. I think those are the biggest ones. Of course, there's a lot of smaller companies as well, a lot of smaller, still large companies. If you look at the global economy, of course, let's say the Nike, Philip Morris International, PepsiCo, Coca-Cola, Walmart. So these are the large companies, and that's especially why we really like investing in the S&P 500. And if you buy one share of S&P 500, you buy into 500 different large US-based companies. So that's it for today. If you like this video, then please give it a thumbs up. Also, subscribe if you haven't done so already. If you've got any specific questions on the S&P 500, then of course leave them down below at the comments. In one of our previous videos as well, we bought some S&P 500 shares via the DEGIRO trading platform. So if you want to check that out as well, it will be linked in the comments down below. And we'll see you in the next one, guys. Let's go.